Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools aren't, so let's get started. So welcome back to another Stock Market Weekly recap, guys. If you've been following us, welcome back. And if you're new, what we do is we look at the previous week in the stock market, look at some important news stories going on, look at some stocks, look at a couple mutual funds, and see what's going on. So let's get into it. So this is for the week of October 30th. I always forget to mention the date. I'm going to try to do that from now on. But happy Halloween earlier in the week. So let's get into it with Dow. They are still above the 23,000 mark. Very nice. For this week, they are up around 0.8%. And pretty soon, if they are, staying along with this momentum, they're going to be flirting with the 24,000 mark very soon. And the other index, we're looking at the S&P 500. For this index, we use the ETF. They closed at 258.45. For this week, they are up 0.29% year to date, still looking very well. And you could see the jumps and drops throughout the week because there was a bunch of things going on with tax reforms with Trump that we're going to be looking at real quick, and some earnings with some companies. So obviously one of the main huge news stories for this week is what the hell is going on with the tax reforms. So it was announced of the plan of what was going on with taxes. Now, relating it to the stock market, investors didn't know how to take it. I guess there are pros and cons to how you really look at it. But when it was released, I believe for that day, it was fairly flat with the markets. So let's go over a couple things that were involved with the tax reform that's going to be going on. So they're actually going to minimize the number of tax brackets. There used to be 7, I believe there are, and they're going to limit that down to 4 different ones. Definitely a lot easier, in my opinion. Whether it's good or bad, it definitely is easier. So the different tax brackets going to be broken down into like a 12%, a 25%, a 35%, and then I believe it's if you make over like $500,000, or if you're married over $1 million, I believe it's set up. The highest tax bracket is going to be the same at, I believe it's around 39.5%. Weird number, but how it's broken down is fairly simple. Now, with some deductions with mortgage interest, they actually dropped that a huge amount. I believe the max amount of mortgage interest that we were able to deduct was $1 million. They slashed that in half to $500,000. Now, if obviously for most people, I'm going to assume that's not going to affect them, but for people with multiple properties, I guess that's a huge drop. Other tax deductions were with child expenses. It used to be $1,000 you were able to deduct, but they increased that slightly up to $1,600. So a little bit more help in that category. Now with the state taxes or inheritance tax, I believe there's not gonna be any of that. So definitely for the wealthy that are passing on the wealth, I think it's gonna be a lot easier. And also with 401ks and like retirement accounts, there were rumors earlier in the month, in the month of October, of how they were going to drop that significantly. So I was definitely watching to see what would happen. Now for the 401k contributions, the max now you're able to, the max is $18,000. There were rumors it was going to drop to $2,400. Huge deduction, but it's unchanged. That's just a rumor. Retirement accounts are still good. And one last huge change that I want to mention to you guys is the business tax. How much taxes businesses are going to pay. They dropped it from 35% to 20%. So that's a huge drop for the markets. That could probably help them out. Now, whether that's a good or bad thing for the economy, That's another question. So that's enough about taxes and all that boring stuff. So let's get into a couple stocks that we look at. Starting off with Apple, of course. Apple had a very, very, very nice week with their earnings. They just started selling their iPhone 10 in stores. Lines are probably out the freaking doors. But we could see on Friday they closed at 172.50. For the week they are up way over 5%. You can see that they did pop a bit because of their earnings, and they just started with their iPhone sales. Now Apple is doing incredible, guys. Of course, with the new phones that are out, holiday season, a bunch of people are probably going for it. There is a price of $1,000, but to be honest, I think a lot of people aren't even going to realize it, because in most situations you have installment plans, like monthly payments to the provider. So I think people aren't going to realize, oh, this is $1,000. No, it's just going to be, oh, instead of paying, I don't know, $40 a month, it's going to be $50 a month. And people are probably going to increase that expense to get this phone. So the company is hitting all-time highs. The company is worth around $900 billion. So insane. I do think Apple is going to be the first trillion-dollar company in the world. Their sales and with like all the countries are all-time highs. I believe their revenue from last year is up 12%. So Apple is looking very nice. Moving on to the next one, Disney, guys. Wasn't really looking at them too much, but you could see for this week up around 1/3%. Still below the 100, still in the negative. But we just have to see again Star Wars. That's all I'm saying. So for the long term, honestly, I'm not worried about Disney. They are planning on, creating this new streaming service that will come out like in a year or two. So that could probably definitely help them out as well. Moving on to the next one, Facebook. They did have earnings, couple ups, couple downs. But for this week, they were up around 0.5%, but year to date still looking fantastic. They closed at 178.92. Moving right along to the next tech giant that we're looking at is Google. Ooh, Google is doing awesome for this week, up over 1.3%. Again, over $1,000 per share, guys, looking very, very nicely. And if you guys remember, just like a few weeks ago, or maybe like a month or two ago, they were down. So they definitely rebounded and are doing fantastic. Now, I wanted to get to Starbucks, guys, because there was some good news with them. So let's take a look. They closed at just over $56 a share on Friday. And they popped 3% on Friday as well. So, for the whole week, they're just over 2%. And you can see the year to date, they're finally in the positive. Now, the reason for this move with Starbucks, again, I'm definitely long-term with them. They are down. A few months ago, they were like in the 60s. But investors are questioning their growth. I know their like estimated earnings growth or sales type of thing is going to be estimated around 12%, which is down from their previous expectations of 15 to 20%. But they are up because the CEO states that he is optimistic for the future. Now, they are still growing, not only in America, but other countries as well, obviously, with their coffee business. I mean, coffee, that's what people do in the morning. But also, for next quarter, they are still expecting a drop in sales sales revenue, because of the Teavana section that they have going on. In a lot of malls, they had they sold tea. So they weren't doing very well at all. So they're selling this business off. They're getting rid of it. over 300 stores. They're expecting to be done with it by, I believe they said, spring of 2018. So obviously without those, that revenue is going to be less. So kind of just expect it. But for the long term, they do have double-digit growth. So I like them. Now moving on to the one mutual fund that we look at is Fidelity Contra Fund. They closed 127.51 for this week. Again, if you know, high flyers and those big companies do well, like the Facebook we're looking at, Google, you could see on the side a little bit there, Facebook, Amazon, Apple, Google, all those big guys. So if they're up, most likely this guy is up. For this week, it is up 0.68%. So, take a breather. This week, pretty good week, guys. I was happy with it. Tax reforms, we're just going to have to see what people think of it. This could definitely move the markets, depending on how investors like or dislike it. Now, for an extra bonus thing, which is going on just because it's so hot right now, huge topic on Wall Street, is Bitcoin or cryptocurrencies. Obviously, you could see from this chart, this is just a month ago, but Bitcoin has been skyrocketing over $7,000 for just one Bitcoin hot topic. Now, I'm seeing this stuff everywhere. Like, even on advertisements on YouTube, people are like, oh, look at my Bitcoin account. You know, I have $250,000, whatever. Me personally, I'm not an investor of it. I'm just watching it just because it's been ridiculous. I'm talking like, for this year, it's up hundreds and hundreds of percent, and it doesn't seem to be slowing. Now, for me, this doesn't seem like a reason why to get in. It seems like everyone is flocking to it, and that kind of scares me. I see bubble features of this currency, guys. I really do. So that's why I'm going to stay away from it. You might think differently. That's fine. But definitely just don't get into it just because everyone else is. I know Warren Buffett talked a little bit about it, of that it's very difficult to put a value on it because it's not a income producing asset. It's just like a thing similar to gold. It's not like it gives you anything. It whatever someone else would pay for it, that's what it's worth. So will it drop? We'll see. Will it continue going up? We'll see. I have no idea. But guys, let me know what you guys think. You could leave a comment down below. I'm definitely interested on whatever you want to talk about. Definitely with the new iPhones, if you're getting that. Or what you think on Bitcoin. But let me know. And don't forget to subscribe to my channel, Real Life Money, where we're talking about real life and money, because not many people do. Thank you so much for watching, and I'll see you in the next one.